So for help, if you guys don't mind, we have our PrimeVerse website, right? If you can, please go to the trading, or actually, let me see where we can go to. If you can go to the news feed, okay? So on the news feed, if you don't mind, just share a post, right? Share a screenshot and share what's working, what's not working, right? You can share the screenshot and show what exactly is not going well or what you see over there. Let us know over here in the news feed, right? And somebody from our team will get back to you guys, letting you know what is the best course of action. So just go to PrimeVerse news feed and you will get assistance, okay? Just want to make sure that everybody did the right thing, right? On Telegram, we have a bot, first of all, right? This is our Trade Insights bot, right? So first you have to start and talk to the bot that will give you access to our Trade Insights channel, right? So I want to make sure we're doing the right thing. But one way or the other, if something is not working, please go to the news feed and put your comment in there, and one of our team members will reach out to you guys, see what we can do to fix that for you, okay? Just keep that in mind. Again, if any signal comes through, we'll definitely place it together. And just want to share something with you guys. So we trade with a live account during these trading sessions. Share with you guys. This is our software, as you guys know, or Oracle, or sorry, Siphon Software Trading Journal. And we've been trading this account starting around November or so. So we started with $25,000. Let me see. Is that it? Which one is that? Oh, there you go. That's my account, right? So we started with $25,000 in deposit, and we started trading around November 10th. Okay. We haven't traded much after, you know, December. We went for holidays and so forth. But from November 10th up until December, we've gotten to a very, very, very nice result, right? So November 10th all the way to December 31st, we are up 50% on the account, and all of that pretty much trading live gold, right? Again, we've had some, moments when when the portfolio value went down and some unlucky streaks. But what's more important is I want to show you guys that with consistent trading, right, you will be able to be successful. And notice that my win rate is not huge. It's only 60%, but my profit factor is pretty good. So every trade that we win is around $400, and every trade that we lose is only $200, $300. And our trades are long enough, right? Average trade is like 45 minutes. So I urge everyone to definitely start. I urge everyone to start this journal for yourself, because it will have every single trade that you guys placed ever on your trading account, with all the profits, with everything, and make sure to rate them. Make sure to put them comments about your mindset and what you thought during the trading strategy, right? It will help you a lot in your personal growth, and just to share the track record, right? So again, starting now, the balance is around $37,000, and we're going to work with that balance going forward throughout the year, right? What I want to see is how far we can take this particular balance in the year of 2026. Hopefully we can make 100K on that trading account, right? But anything will be great as long as we are making reasonable trades that follow our rules and our strategy, right? Balance around 38,000. As I mentioned, it will be tracked publicly, and we will see how we do throughout the year, just for the full transparency. Now, coming back to the strategy, actually, let me share with you guys what is the strategy specifically. So if there is an entry, I'll mention that here. But in terms of our strategy and the approach, number one rule, we manage our risk, right? This is golden rule in trading. Anything you do trading related, we are always going to manage our risk, right? In this particular case, we're managing 1 to 2% in risk per trade idea. So on a $35,000 account that I have right now, I'm going to risk between $350 to $700, sometimes up to 1,000, 3% or so, to as a risk on my trade. And of course, we're looking to make double that amount or even triple that amount whenever possible. Now, we use certain rules or confirmations. We're looking into the market trend, right? So what does market trend mean? Is how the price has behaved for the past history, right? And so far you can clearly see, right? We had the low, the high, the higher low, higher high, higher low. We made another higher high, and we're in the process of making another higher low to continue to the upside, right? So the rule number one is by all means check what is the market trend? Where is the market going right now? Okay. Then a couple more things when we go into smaller time frame, right? 1 minute, 3 minute, and so forth for our execution, right? I use relative strength index, RSI, specifically on 1 minute time frame or so, to gauge as to where price is. If you guys don't mind, type in the chat RSI if you know what it is. If you don't know what it is, just type ones. If you know what RSI is, type RSI. If you don't know what it is or how to use it, type ones. So Philip knows. Hey, Philip, that's good. Means you went through a little bit of our coursework as well. That's good. Anyone else? Again, if you don't know, just type one. But if you do know what RSI is or how to use it, type RSI in the chat. What I'm going to try and do, I'm going to try to place a small entry considering the price retrace back down. We're going to try and go long on this particular trade with like $4, 40 pips risk and roughly 100 pips take profit. Again, it's going to be a pretty big take profit. We're not necessarily going to hit that, but if we go up, I might take some partials on the way. Okay, so many people don't know. That's good. 111 will help you guys explain what it is and just discuss it in more details. But before that, let's enter a trade and see where. Bear with me a second. So 1 minute time frame. I will try and enter a buy, and it's going to be small. Let's do full one lot with this particular one. One lot buy. We're going to put a stop loss. We enter it around 36.5. We're going to put a stop loss around 31.5. Okay. We're going to risk around 500 bucks. And our take profit is going to be roughly the top right there. Okay. It's around 2 to 1. Right there. Okay. So 36.5 and stop loss around 31.5. Let's put those entries in. Entry at 44365. The stop loss 44315. Okay, that's our trade right now. Again, what we want is we want to give it some room for breathing, just in case it manipulates to the downside to break the range. We want to make sure that we don't get stopped out very quick. Okay, our entry is roughly right here. The stop loss around 31.5-ish. Right? We'll see how it goes. If anything good goes from there. Again, we will be taking partials along the way, but our first, I always break it down into TPs. Our first TP is always around, 30, 40 pips away from our entry. So 39.5-ish, that's our first TP. And then second one would be around 60-ish. So around 42.5. And then final one will be right there. There you go. So 3 TPs, right? Just so we exit gradually. We don't want to stay in the trade too long if it goes in profit and then goes against us, right? So what we want to do is want to manage our risk while we're in the trade. Now, the rules that we use for trading, right? So TP3 is 44.46 roughly. And then TP2 is 44.42. TP1 is 44.40 roughly. That's the approximate entry plus approximate take profits, right? If stop loss is hit, so be it. What's most important is that our stop loss is below this last low. If we break it, most probably we continue to the downside. But I like to take my chance over here, and we'll see how that goes from there. Now, talking a little bit more about the strategy itself and what we use for our confirmations, what we use to enter the trade, what are we looking at in particular, just to get some reassurance that trade is going the right way or that trade idea is correct indeed. Now, number one is, as I mentioned, market trend. We are clear on that. Number two, RSI. When we're looking at the RSI, it's the tool that can be found on TradingView or on your MetaTrader. I use stochastic RSI in particular. You can easily find it in your indicator section, right? Just type in RSI and you'll find stochastic RSI. Add it to your chart. It's a default indicator. Nothing needs to be changed. What's most important is you want to be looking at when the price is way low or way high, right? Those are the two areas that you're going to be interested in. The price is way low or way high, right? Those are your potential entries for buy and for your sell trades, right? If the price is low, that's an opportunity for the price to go up, meaning price is oversold and there is a good opportunity for you to buy. This is the good discounted area for you to buy while the RSI is low. When the RSI is high, for example, like it was here, right, around this area, that means price is trading at a premium, right? Price is a little bit too high, and there is an opportunity for the price to go down. Not always going to be 100% correct just by itself, but it's a very, very useful tool where you can understand when is not a good time to enter a trade. So for example, if I'm looking for a buy, right, if I'm expecting the price to go up and RSI is way high, this is not a good time to enter right here. And you could be taken out already, stopped out, right, with this one move to the downside. However, now that price has gone down and RSI is way at the low, it's at zeros, this is a better time to buy. Again, this indicator by itself is not going to be useful, but in conjunction with the other tools, in conjunction with the other affirmations and confirmations, that can be useful, okay? So we're using it based off of that. We're also looking at the fact that we are reaching the lows of the range. Not only that, we actually went all the way below the lows of the range. And let me show you guys right here. We're pretty much retesting this whole area right here, right? So if we break that right now, if we break these lows in this test, price will most probably plummet to the downside and continue its retracement lower. But for now, this is the last area where I'm looking to buy from. If this breaks, of course, that means we are wrong and price will continue going lower. We can get an opportunity to buy at a better price later on. See, quick move to the downside, just a final test to see whether we get stopped out or not. Okay, as you guys can see, price has moved down very rapidly, very strong bearish candle right here. So as of right now, this support has been broken. This is the final area of interest. Just to clarify for you guys, we've entered and we've exited, right? So all my entries, all my exits are full transparent. We can see right here that first 06 minus $500 on this trade. And that's absolutely fine, right? If the price just goes higher right now, that's okay for me as well, because my risk has been taken care of, right? I've been managing my risk exactly as I planned to. That did not work out, so be it, okay? Of course, if you're still holding for a small position, you can keep your trade open, but make sure to manage your own risk and understand for yourself as to where you're going to get out if the price continues to go lower. Now, one final thing that I'm going to show you guys is Fibonacci alignment. Of course, this is outside Zoner, right? Zoner, by the way, very interestingly enough, it was giving us an entry and a stop loss. The stop loss on Zoner was precisely where my stop loss was, right? So this gives me a reassurance that my stop loss placement was correct. Indeed. And you can see very nicely here, Zoner entry and Zoner stop loss. So I use Zoner as my additional confirmation too. This is one of additional tools that I use to understand whether my analysis aligns with Zoner, whether Zoner is telling me the same thing or not, and so forth, right? Of course, if my analysis and Zoner analysis are different, I might still take my trade. But if Zoner is telling me the same thing, one of our best tools right now, that gives me more confidence knowing that, okay, my analysis is confirmed by its owner. So I would take this trade every single day. Even though this trade did not end up being the right one or a profitable one, I did take a loss, but this trade perfectly followed my rules. I managed my risk. I exited where I had to. I gave it enough room for breathing. The fact that the price has manipulated lower as soon as we entered, I could not have predicted, right? Of course, it might pop up from here, right? So be it. If that's the case, hopefully one of you guys who's still staying in the trade might be able to benefit from that, right? But again, this was my stop loss. I was pretty strict on it. What's important and what's interesting is that it was this area right here, this whole wick right here. We've pretty much taken that wick out. So we could easily go to the upside here and pretty much go back up to the daily open, even higher, right? But again, it's not within my risk parameters, right? My risk parameters are telling me that this was as far as I was ready to take it. I got stopped out with a wick, so be it, right? I'm not going to chase that trade. I'm not going to re-enter another one right now just because this is not within my strategy, right? I was taken out, that's fine. We're back to the entry, that's fine, right? Meaning either my stop loss should have been bigger or my trade should have been smaller, one of two, right? But again, part of the game, part of the risk management, part of education right there for you guys. Question is whether this trade idea will be right or wrong. We'll see about that. But what's important is to manage your trade, manage your emotions while you're in it as well. Now, one final thing that I want to show you guys that I use in my analysis and my approach is the Fibonacci, Fib alignment, right? What you want to see and what you want to understand is whether the Fibonacci retracement zones have been respected. Please let me know in the chat once again. If you know what Fibonacci's are, type once. If you don't know what Fibonacci is, type 0. If you've used it, right? If you understand it, want to make sure that everybody's following and everybody's comfortable with the concept. So please do let me know. So if you know it, type 1. If you don't know it, type 0. Okay, so far 2 people know the Fibonacci. That's pretty good. Okay, and changed it to 0. Okay, guys, need more activity. We have 16 people. Let me know. I need more comments. I need at least 5 more. So we have 3 comments. I want to understand the level of the group right now that we're working with. So 1, I know. 0, I never used. Okay. Appreciate the comments, guys. So we have Rico, let me see. Need to trading, first time joining Zoom tonight, so a big no for you. That's fine. We'll get you there, Rico. Don't worry about it. That's what these live trading sessions are about, right? Getting you guys to a level where you're comfortable with the new tools, with the new indicators, and doing the analysis by yourself. That's why we're doing it gradually and step by step. Now, many of you guys, as mentioned, right, Philip saying never integrated into their trades. Nick says knows a bit. So let's break it down, okay? Fibonacci tool is used to analyze the price action and see what it does, right? Whenever price going to the upside, it will inevitably go back down, right? It will retrace one way or the other before it continues higher. This is our basic price action. Price never goes up in one straight line, right? This one straight line always consists of many small moves, right? Whether they're going to be deeper or not, right? All of this is part of the Fibonacci sequence. So price always moves in waves. It never moves in a straight line. It cannot go up or down in a straight line. Now, that being said, Fibonacci is a tool that will help you guys understand when price is going to the upside, how do you measure the price action? How do you understand where the price could go next? Or when is it a good time to buy? You will use your Fibonacci tool right there, okay? Fibonacci retracement tool. And you'll start at the bottom of the price action and you'll measure it all the way to the top, all the way to the top that you formed, right? Again, you might not know what's going to happen. You might only see this so far. Boom, that's it, right? But you measure this anyways. This whole move to the upside, you measure that. Now with Fibonacci in play, bear with me a second. With Fibonacci in play, you will have different levels: 38%, 50%, 61, and 78. I also use 71. That's a level I personally like a lot because this level helps me understand that price can get to in between 61 and 78, right? So just an extra. Now, what it's pretty much saying is that whenever price goes up, it has to go down before it continues higher. Okay, that's all it's saying. Now, when price has moved up, the point of Fibonacci is once again to wait it out, right? Not to rush and buying here, not to rush and buying here, but wait it out until it's in one of the zones where you can buy from. Okay, follow me here, guys. So in this particular scenario, Fibonacci, right, has reached to 50% right here. In that case, RSI would also probably align, right? RSI will come back down, boom, right there. What you would be doing is you would be interesting to buy at the bottom with your stop loss at the beginning of Fibonacci or below 78%. And your target would be divided into three. The previous high, this 27% and 61% right here. This is your trade based on Fibonacci 101. This is 1.3. This is 2. This is ratio of 3, right? So risk to reward gets bigger as Fibonacci retracement goes higher, right? And you can continue with the same analysis going forward, right? So once one Fibonacci has completed itself, right, you can pretty much do the same thing over and over again. Just take the same story. You've closed your trade in a profit. Good. 2-to-1 risk reward, done. You measure it again from the bottom to the top. This time we only reached to 38%. So be it. If RSI went back down, right, it went up, and it's at the bottom again, still a good time to buy. So you enter again and you go again to the upside with stop loss below 78%. Boom, there you go. That's your second trade with 2-to-1 risk to reward ratio. And you repeat and repeat and repeat this process, right? Again, you will see from the bottom to the top, wait it out until it retraces. Wait all the way there. You can take it earlier, but the lower you get in, the better your risk to reward is going to be. Okay? I see there is a comment in the chat. So, good question from Philip. Coach, how do you know which fib levels to mark from? You're not going to know. Simple answer, Philip, right? Just based on Fibonacci, you're not going to know, right? Fibonacci by itself is not enough, right? But in conjunction with the other things that we've been learning, that we've been discussing, all things put together, that is something that will give you confidence, and that is something that will give you reassurance that you are getting at the right level or at the right price, right? So far, we've discussed the Fibonacci, the RSI, and all of that. But look, if I give you an example right here, watch. Again, right there, right? For example, yesterday around nighttime, or even here, right? Price went sharp to the upside. And then we started moving in waves, okay? Clear price action right here. Show you guys. This is the bottom. This is the top, okay? You measure this price and you measure how the price has behaved from the bottom to the top. You will see, well, let's do 1 minute time frame as well, just so we get all the details. You will see that the price has retraced. So we went up right there, and we retraced back down to 78%. Right now, what you want to do is you want to compare it on multiple time frames, right? So what you will see as we were retracing lower here, the RSI went up together with the price, and it went down right there, right? And it stayed low for a while. So what you could have done is you could have entered at the bottom of the range as long as your RSI is low, right? Don't forget, it has to be below the blue marked area. So anywhere in this area, anywhere here is a good entry potentially for you, right? So that is what you're looking at, then that's what you're marking up. When RSI is at the bottom and when Fibonacci is giving you a reasonable level to go from, right? So in this particular case, 38, 50, my rule of thumb is usually wait out for deeper retracement like 61, 71, 78. That will give you best risk to reward ratio in terms of the trade opportunity. But in this particular case with the price, entry right there. As soon as RSI is low and as soon as Fibonacci reaches back down. Notice what? Previous levels, right? This high right here, this high. So, right? So this is again market structure 101, right? We have simple price action, right? Price went up, retraced down, went higher, and it retraced back to the previous high, right? So this previous high is also an additional confirmation for you that this is an important area to look at where you could enter from, right? And then you would just put your stop loss at the bottom of this area. It's a pretty wide one, but again, you have to be careful with the way gold is moving. And you would put your take profit at 27%, right? Within certain amount of time, price would get there. Yes, it would take you some time. It would take you, 7 hours in terms of a trade. It would be a swing trade per se, but at the end of the day, this trade would have gone through perfectly, right? I can give you more examples on smaller time frame, right? Even like this one right here, right? December 31st, the way price is moving and so forth. This could be a simple trading approach, right? You don't need to overcomplicate price action, right? If price started going lower, right? So market structure shifted, went down, retraced higher, went lower. That's it. You have a series of lower highs and lower lows. Market went from bullish to bearish, right? All you have to do really is measure it once again with fib from top to bottom and wait for the RSI to get up, right? And you will notice once again that this has retested this whole area right there, right? These previous highs, the zone where price consolidated, retested the 78%, and RSI was at the top back then, right? So you would just go short, even not a perfect entry, stop loss at the top, take profit at the bottom, right there. This trade catch you 190 pips in one trade with stop loss of 40 to 50 pips, 4-to-1 risk to reward ratio. That trade would have played out within 40 minutes, right? With 0.1 lot size, that's $200 right there, done for the day, most part, right? No need to trade more than that. So RSI and fib work very well together, especially in conjunction, right? Even this whole big move to the upside, right? That can be measured as well from the bottom to the top right there. Didn't get to 61, but you will notice that it reached 50% 3 times, right? So I'm just showing you guys things that I find useful, something that I've been using for a while. You notice it's been tested once, twice, 3 times, and it got to 27% perfectly. So you can start utilizing Fibonacci because even our software Zonar is utilizing Fibonacci in its own targets and so forth, right? And these lows also notice RSI, right? Again, different time frame, different approach. You don't want to have too much details, but at the same time, you want to have reasonable enough RSI approach. Bottom, 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 right? 50%, 3 times. Target 27%. Boom. Wait it out, get in with a sniper entry, sniper exit, stop loss around 78%. There you go, right? A perfect trade. Of course, you could also reduce your risk, right? You could put it to the next level of Fibonacci and reduce your risk, increase your risk reward, right? That's what I usually do. I would exit at the next Fibonacci level and re-enter if the opportunity presents itself a little bit lower, right? My win rate wouldn't be as big, but my stop losses would be pretty tight. Please, if you don't mind, type W in the chat if you understood the concept of Fibonacci. It's a very important one, and I will reiterate it on Wednesday, right? But what's important is that you guys understand that price moves in sequence, never moves straight up, never moves straight down. Anything that goes up needs to come back down before it continues, right? With our current example right here, right? If we just remove everything, remove our previous examples, this is something that we would be looking at. We have the low here, and we have the low right here, and we have the high right there, right? So you would use your Fibonacci two ways, either or, either from this low right here all the way to the high, and you will see that we're pretty much touched the 71% right there, right? So the next target based on this fib would be all the way up here. And notice how the next one will be 61 right there. Or you could do it the proper way per se, because the low of this whole move is right there, right? It's pretty far, right? Just to be clear, but it's still there, right? Just to be honest. This is pretty much the whole New York move to the upside, right? And you will see that we haven't even reached 50% just yet in that case, and 27% is pretty much spot on the red line for us, right? So in this particular scenario, you're going to want to wait it out, right? Either for the price to reach back to this area right here, around 61, or even better, wait it out until it gets to 61%. That's probably going to be the perfect entry for the long opportunity if we get that, right? In this particular case, all we have to do is pretty much wait for the price to get to 61% and then take our long trade. This is a pretty big one, right? This is a swing trade. Don't forget that. It will probably take overnight or tomorrow for this to happen, right? But you can break it down into smaller increments, right? Even right now, considering we broke lower and we cannot go up, price is just rejecting it and rejecting and rejecting. You can use the same Fibonacci and RSI approach on any time frame. Look, RSI was way at the top, right? You measure this whole move down from the top to the bottom, and you notice how we reached the 50%. Together with that, this 50% is the previous low, right? So the easiest trade that you could take, considering you broke the low, is from 50% with stop loss around 78, come down here, right? That is your potential trade on the way down, right? So again, you have to consider the market trend, but you also have to understand that you have to be dynamic as the price moves. Let's be clear, since the market opened up right now, Tokyo, and the evening session, the market has been nothing but bearish, right? We have the high, the low, lower high, lower low, lower high, lower low. We might be creating a lower high as we speak, right? So that is where your another potential entry could be, right? You could also have a look at the 3-minute time frame and notice how RSI is getting there, right? So in this particular case, anywhere in this range, if you're looking for the price to continue selling off, again, it depends what your bias is, right? But if you're expecting price to sell off, 61% entry, stop loss above 78, target down there, an amazing 3-to-1 risk reward trade, right? So hopefully that is something that will teach you guys a new concept, a new approach towards trading, right? These are simple concepts and they very well align with what smart money is teaching. So it's not something that would conflict each other. It would be something that complements one another, right? Philip is asking, I have my RSI set up as 4060. Would you recommend 2080 for more precision? Philip, I just want to make sure that you have the right one, right? Because standard RSI, regular relative strength index, that's the one that's set up, right, in a way that is close to what you're saying, 70 and 30, right? I just want to clarify that this is not a regular RSI, okay? This is not a regular RSI. It's a stochastic RSI, right? So you don't use the regular one, you use the stochastic. Stochastic will go to the extremes more frequently than the regular one would. That will give you more opportunities for entries, right? That will show you the extremes of the price more frequently, right? Keep that in mind. So to answer your question, my stochastic RSI is 80 and 20 by default. So yes, to answer your question, it has to be 20 and 80 for better precision because you want to avoid the time it spends between 40 and 20. That's not a good time to enter, right? Your best time to enter when price is below 20 or above 80. Best case scenario is 0. You can see right there at the top left corner, you can see that when the price is at the bottom here, it's pretty much 1, right? So that's very low, right? You don't even want to enter when it's 20 or something like that over here. You want it to be at the extremes, right? So keep that in mind. I think it's very important that you use RSI the right way. Okay. I hope that teaches you guys something new. We'll finish up there. Bear with me a second. Yeah. So we'll wrap up here. As you guys can see, right? Price has just moved down very quick, right? That's what I'm talking about when I say you have to go with the trend. If the market trend is to the downside, right? Lower lows, lower highs, lower lows, lower highs, most probably will go for another lower low until market tells you otherwise, right? So even though our first entry for the buy side wasn't the best, this potential trade was pretty great, right? With the entry around 50 or 60%, this trade would have been 60, 70 pips in profit already, right? So hope that's a good learning for you guys. I hope that you guys are learning new concepts, and please keep showing up. I do these sessions on Mondays and Wednesdays, right? Every week. So as you show up to these sessions, you will get more and more comfortable with levels, with the tools that we use, and you will be able to follow along much better, and we'll be able to actually place some live trades together, right? We didn't have a lot of people in today, and we had a lot of beginners, so I wanted to rather concentrate on education than on signals, because we have an amazing signal group. They were, seems like, providing some signals, right, as we spoke. Yeah, 35, and it got to 37. Yeah, they got it. But again, it's not so much about money at this stage as much it is about education and perfecting your knowledge. That's what I believe. So thank you very much, everybody, for showing up. It's the beginning of the new year, January the 5th. I'm looking forward to this amazing year of 2026 for every one of you. Together with PrimeVerse, we will achieve a lot of great stuff together. So as always, we'll be there with you guys on Mondays and Wednesdays. If you enjoyed the session, type W's in the chat one more time. And on that note, we will wrap up. Thank you. Thank you so much for showing up, guys. Happy Monday, and we will connect on Wednesday this week. Thank you, and bye for now.